Hey, what's up everybody? This is Brian Bobo at Hunt Real Estate right here in the beautiful Finger Lakes. If this is your first time to this channel and you want to know everything about working, eating, sleeping, living, playing, and buying a home, then make sure you tap that subscribe button. Click the little bell so you're notified every time I do a new video. Honestly, I get so many people calling who are relocating here and I absolutely love it. If you're thinking about moving, relocating, or coming here to stay, make sure you give me a call, shoot me a text, send me an email, or even send me the pigeon carrier. However you want to get a hold of me, I've got your back moving to the Finger Lakes. So back here with Lindsey, and today we're going to talk about the different mortgage types and advantages and disadvantages of each of those. So Lindsey, I'll let you take it away.
Thanks, Brian. I appreciate you having me on again.
Absolutely.
Yeah. So what we'll kind of do today is go through kind of your four basic loan types, conventional, FHA, VA, and USDA. Obviously, there are some outside of that, but those are kind of what most people are going to fall into. So we'll kind of hit all the points of each of those.
All right.
Yeah. So first one is what we call a conventional loan. That's kind of your standard loan type. That's what everyone's going to go into unless they have a special case. And I'll kind of talk about those next.
Okay.
But the pros of a conventional loan, they're widely recognized. Everyone knows what they are. They allow you to not only purchase a primary residence, but you can use them for investments and second homes as well.
Okay.
And then the other thing that's kind of a misconception, so it's either a pro or a con, however you want to look at it. But a lot of people think you need to put 20% down on a conventional loan. That's actually not true. When you do, you don't have mortgage insurance. So that's kind of a plus side.
Yep.
And then if you choose to put less down in the beginning, your mortgage insurance actually falls out once you hit 20% equity in your home. So you can get rid of that at some point.
Awesome. What is there like a percentage, or how does the mortgage insurance work as far as the cost of that?
Yeah, it's kind of tiered. So it depends if you put 3% down versus 10% down versus 15 and then 20.
Okay.
And then from there, it's a percentage of your loan amount.
Okay.
And you'll see that show up monthly. Yep. So as you put more down, you get a little bit less. It's also credit dependent. So depending on your credit score, that can have an impact as well.
Okay.
Yeah.
So speaking of credit score, with a conventional loan, and maybe it's the same problem, maybe it's different. What is like I guess you'd say the lowest credit score where somebody would be able to get approved for a conventional loan?
Right. Kind of bare minimum there is going to be at 620.
Okay.
Your conventional loan is definitely going to be more strict on both credit score and your what we call debt to income ratio. Okay. So just to kind of reference what that is, a lot of times we see DTI. As a lender, we're going to look at what your monthly income is and what your monthly outgoing debts are. And we're going to include your new mortgage payment within that. And there are guidelines to say that your debts can only be a certain percentage of your monthly income. So your debt to income ratio. Okay. So conventional, you're going to see a little bit tighter there than you would an FHA. I'll talk about that next. Okay. So it's a little bit more strict.
All right. What about, a big thing that some people might need, which I know is a bigger deal with other loan types, but with a conventional loan, what about seller concessions? Is there
so seller concessions, then again, we haven't seen them a ton in this market, but they are still coming through on contracts and still being utilized. They still exist. Mm-hmm. But your conventional loan is going to allow the least amount of seller concessions. So the rule there is that you can ask for up to 3% of the purchase price. And just so people know what that means, when you're putting in an offer, your agent, so Brian, you would work with your buyers to negotiate this and put in an offer asking for seller concessions. All that's really doing is the seller's agreeing to take less net proceeds from the sale, and that's getting credited towards down payment and closing costs.
Okay.
The only other thing I'll mention on this one
Yep.
is down payment. So when you're a first-time buyer, you have the option to put 3% down. And then from there, otherwise it's 5%. And then again, that 20% is kind of the mark that you can knock off mortgage insurance. So a lot of people like to take advantage of that.
Okay, awesome. Okay, so after conventional, I know another big mortgage type, especially maybe for younger people, would be an FHA loan. So could you talk a little bit about that?
Sure. Yeah, this is probably the other most common type we see. These are government insured, which is both good and bad. So the benefit of that is that there's a little bit more flexibility on credit score and that debt to income. So you can push the limits a little bit more. You might be able to afford more on an FHA than you would on a conventional.
Okay.
Drop dead credit score here is a 580. I say that loosely because typically you might need to put more down than the minimum, but it is an option, which doesn't exist on conventional.
Okay. And then what about seller concessions on an FHA loan?
Sure. So the benefit of this loan is that it actually allows for a little bit higher, whereas conventional is 3% of the purchase price. FHA allows up to 6%. So for a lot of people, this is necessary, even if they don't need it for credit reasons, right? They might need that extra money for closing. Minimum down payment on an FHA is 3.5%. So it could be a little bit higher than on conventional if you're a first time. But the big benefit here is that a lot of people use an FHA when they want to purchase a multi-unit.
Okay.
If you're going to occupy one side of the property, FHA allows you to put 3.5% down. Whereas on a standard conventional, if you want to buy a 2-unit that you're going to live in, you have to put 15% down. So quite a big difference there.
Oh, definitely, for sure. Maybe first-time home buyers aren't necessarily thinking of the rental aspect of it, but really that could knock down a lot of their mortgage payment if you can get that other unit rented and still have the benefits of the FHA.
Absolutely. And we see people take advantage of that all the time, especially if they need that rental income to help them qualify.
Sure.
You know, if they're income restricted and they need to use that, that also can help people.
Awesome. Is there mortgage insurance with an FHA loan?
Yeah. Yep. So one of the cons of this loan type is that mortgage insurance stays on for the life of the loan unless you put at least 10% down. Then it falls off between like year 9 and 10. So you still have it.
Okay.
A lot of times what people will do here is they'll end up refinancing out of an FHA at some point just to get rid of that.
Okay.
Because it's government insured and they're taking on typically a riskier borrower, you're going to see higher rates.
Okay.
So that could also be a downside. And then, you can speak to this a little bit as well, but kind of the difference in competitiveness between conventional and FHA right now in this market.
For sure. I mean, right now we're definitely seeing highest offers is more often than not winning. But for people who are financing, I think just in the mindset of sellers, conventional just is kind of the safest route to go. Because it's less restrictive as far as the appraisal too, right?
Yep. Yeah. So kind of, I think what it's stemming from there, right? If you're looking at 2 offers and one's FHA versus conventional, it doesn't mean that FHA is bad.
Right.
But as a listing agent, they kind of know that, yes, the appraisal is going to be a little more stricter because it's government backed. They're going to look a little bit more closely at like health and safety issues. So railings and things that probably wouldn't get noticed on a conventional loan.
Sure.
Yep.
Okay. So, I know maybe there's a little more work that might have to be put in by sellers, but shouldn't necessarily be a deterrent to people.
Agree.
Especially now, there's a lot of young people looking for homes, and maybe they offer a higher price to get some of those concessions, which is something sellers should also think about. Maybe they're asking for concessions, but they're upping their offer. So the seller is still going to be in that area that they want to net. So sellers definitely should be open and understand the differences and the different types, and know that they're not necessarily bad. There's just different advantages for the buyers, or maybe just something that a buyer needs to help them out to be able to purchase that house.
Right. Agree. And I think you brought up a really good point. As lenders, when we're looking at seller concessions, we're typically, when they're getting pre-approved, trying to tell them about going higher on their purchase price to offset that. Yeah. So that, your seller is going to be able to net what they wanted.
Yeah. Awesome. Okay. So after FHA, we got 2 left. So why don't we talk about USDA a little bit?
Sure. So this is another government-backed loan, just like an FHA. The nice thing here is that it allows for 0% down. So this is a great option for people that might be short on funds to close. Another benefit here is that your mortgage insurance premiums are actually a little bit less than FHA. So if you're comparing between the two, this may be the route to go. Okay. You get 6% seller concessions here, but a little caveat, it's actually 6% of the loan amount, not the purchase price. So you can actually get a little bit more on a USDA if needed.
Okay.
Yeah.
Now, with FHA, there aren't any restrictions, are there, as far as where people can look for houses, right? Whereas USDA, at least in our area, and obviously this is generally speaking, but like Canandaigua wouldn't fall into the USDA. I think one is it Victor maybe that doesn't part of Victor maybe, and
I don't think they would.
Rochester. Yeah. So USDA, you have to be looking, or at least willing to look, in more of the rural areas around Rochester.
Yeah, so like Ontario County, Wayne County, and that's what it's targeted for. That loan type is targeted for lower income borrowers in these rural areas. So it is property specific. They have a website you can go on and look up specific homes to see if they qualify.
I know I believe you mentioned something about mortgage insurance. So is this like FHA where it would be for the life of the loan, or does that go away at some point?
Also stays for the life of the loan.
Okay.
So that could be a negative, but again, you always have the option to refinance. So, if this is the loan type you need to start out, you're not stuck for 30 years essentially. Okay.
So is there anything else, good or bad, that anybody should know about USDA loan?
Yeah, I think the other thing here is, again, similar to an FHA, but we have some income limits here as well. Okay. So that's something to keep in mind. They look at your household income, and it stems between, having a household of 1 to 4 people. So if you have 2 people going on a loan, the limit's kind of set around an annual income of $92,000. So you've got some room there, and it works for some people, but you don't have those restrictions on an FHA.
Okay. Again,
I think the other thing I would mention here is can't use it for investment properties or second homes.
Okay.
And because as lenders, we can't fully underwrite in-house like we can in FHA or conventional, has to go to the USDA. You can have longer turn times here. So that could be maybe less desirable for a listing agent, or make you less competitive. Okay. But just something to keep in mind.
Okay. Awesome. And then the last loan type that Hunt Mortgage offers would be VA.
Yeah. And this is a really nice loan. Similar, if not more desirable than a conventional, at least for borrowers. This is intended for current and previous military. So there are some rules around days of service. If you're active, I think you have to serve like consecutive 90 days. Okay. but you can also take advantage of this loan type if you're in the reserves or National Guard. Similar rules apply there. If you're active, you have to have 90 days of service. If not active, 6 years. And typically people know already if they qualify for this loan type. So that's not usually something that they have to worry about. They're typically coming to a lender knowing that they're already eligible. They have that. This is another really nice loan, 0% down, which is great. You don't really have your income or geographical restrictions here like you would on a USDA.
Okay.
They actually tend to have lower rates than a conventional, your standard loan type, which is really nice for our military members.
Yeah, definitely.
We have the option for a concession here as well. Their rules are a little bit different. They allow 4%, but your sellers can also pay closing costs separate out of that. So a lot of times you can actually get a little bit more here if needed.
Okay.
No mortgage insurance, which is a huge plus.
Absolutely.
Yeah. Right.
Which is awesome.
You pay kind of a one-time funding fee, but it's better than having that monthly insurance on there.
Sure. Absolutely. Absolutely. So great program for those who are or have served, which they definitely deserve. So,
yep.
And one thing I don't remember if we mentioned for USDA, but appraisal for USDA and VA also a little more strict than conventional. Just making sure that people aren't necessarily having to move in and then do a lot of work. The government-backed loans, they want people to move in and pay their mortgage and not be having to spend big money on repairs and stuff that need to be done.
Which is a good protection for your borrowers, I guess.
Absolutely. Yeah. So with all the 4 loan types that you guys do, what is a typical time frame that you guys are able to clear a loan to close?
Yeah, I would say that 30 days is not out of the question. Sometimes it can depend on title, but from a mortgage standpoint, if you have somebody that's really good about getting their documentation in, we can typically have mortgage commitment in, I'd say 1 to 2 weeks, and then have them cleared shortly after that, maybe an additional week.
Okay, awesome. That's huge, because I know other banks, your typical brick and mortar, where you do your banking, I mean, it can take 30 days or more just to get your commitment. Where if somebody decides to use Hunt Mortgage, you can actually give the clear to close on the mortgage side of things in 30 days, which is a lot of other banks' commitment time.
And I think, that was something that this year, and it will continue into 2022, but that was something that was able to make our borrowers more competitive, even when they're putting their offers in. If they could have a mortgage commitment guaranteed in 2 weeks, they're going to be more desirable than somebody that can.
Absolutely.
Yeah.
And then, which actually will be our next video coming up, Hunt offers a pre-commitment, which is a program that I personally love. I know buyers that have used it love it, but it's where people can actually get commitment before they start looking at houses. So don't want to get too much into that, because that'll be our next video, but great program. Hunt Mortgage is awesome overall. That's not just me saying that because I work for Hunt. There's agents that still have other banks that they like to use in relationships that they've had, which isn't a bad thing. But just knowing that somebody like Lindsey isn't just a typical 9 to 5, working in the bank. If an issue arises in the night or the weekend, I know I can reach out to Lindsey and we can get things resolved outside of typical business hours. So Hunt Mortgage is a fantastic resource. So Lindsey's information will be at the end, along with mine. So reach out to either one of us, and we will be happy to talk you through the process and even maybe give you a second look if you've already been pre-approved through a different lender.
Yeah. Awesome.
So
Thanks so much
you,
for
Lindsey,
that, Brian.
What's that?
Thanks so much for that.
Absolutely. Yeah. And thank you for coming by again and talking about the different loan types and different services that Hunt Mortgage offers. And like I said, next time we'll be talking about pre-commitment. So hopefully we'll see you next time. Thanks to Lindsey for dropping by again and talking about the different mortgage types that Hunt Mortgage can offer you. But again, you've got to reach out to me to find that perfect area that maybe you're thinking about living or want to go see. In order to do that, you've got to give me a call, shoot me a text, send me an email, or even send the pigeon carrier. However you want to get a hold of me, I've got your back moving to the Finger Lakes. And until the next video, I'll catch you later.